Hi, everyone. This is Michael Bengiat with Lifetime Investor, and this is the Stock Picks weekend review video for January 14th, 2023. And I hope you guys are all enjoying a long weekend. Don't spend all your time looking at stocks. Enjoy and have a life. But let's go ahead and just get started. We're going to look at the current market environment as usual, and we have a couple of stocks in our portfolio now. And then we'll look at the stocks on our watch and ready list. So just to review, we've moved our stock environment indicator to yellow from red. So that's a positive move. But we're still not getting a lot of traction. So we still have the best strategy is very short-term swing trading. But we did move our recommended stock exposure up to 20%. So we did get this week, pretty good action. We're getting more breakouts, and they're holding at least for a few days, which is an improvement. But there's just not a lot of follow through. That's the big issue here. Very few stocks have gone up even 5%. They're just kind of moving up a little bit and then just kind of holding there. Our positions in Toro and BP are just only up a little bit. And I've noticed just looking at things on the watch list, some go up and some go down. So really not a lot of progress. So, but that's it's an improvement. So that's what we're looking for. And also that one of our main screens, there's just not a lot of stocks. It's still under 200. In good times it'll go over 1,000, which means there's lots of merchandise. So right now we're still getting not much merchandise on the shelves, and we're also getting just a lot of rallies that are just coming off of the bottoms of bases. They're not setting up properly. They're just ripping up, and they're just not really viable. We're always looking for low risk entries, not high risk entries. So even though you'll see quite a lot of stocks you seem to be moving, most of them are just not being set up properly, so we're not really able to buy them. So that's the overall market. So just to wrap it up, it looks pretty good, but we're just not quite there to the point where we can really start kicking up the exposure, because we're not getting the traction. We're not getting, we also want to try to build on gains. So we have two positions. If we say this even numbers, if we have $1,000 of profit, that helps finance another stock that we could put on or two stocks. Let's say we have $1,000 unbooked profit. Ideally, we would book it, but let's just use this example. So we have $1,000 of unbooked profit, it's still open, and we could put on two positions now with $500 of exposure. In other words, if we got stopped out on each of the next two positions and each one had $500 exposure, we'd end up breaking even. But now we've actually sort of financed two more positions. So that's how we always look at things. And we're always trying to see, not just pile in there, and then if we all get stopped out, now we're down, a big percentage of our account, but using profits that have built up to help finance other positions. So we'll see. We're not there yet. We just haven't got much going on with our two positions yet. But let's go ahead and take a look at those positions. So let's move to MarketSmith. And the first one is Toro. So we ended up buying it coming out of, let's see, our purchase price was right. We were buying it right about, right. You can't get super tight with these, the drawing on this, but yeah, right there. So you can see we're getting some, see if I can draw the line. That's the only thing I don't like about MarketSmith. You can't, so you can see we kind of got up to this level. Sellers were kind of pushing it down above this 114.50, call it. And then we kind of tightened up right under it, and then we broke out. So, but it just hasn't really gone anywhere. And you can see we had, after it broke out, we had 3 days with just on the closes in the lower parts of each of the days. So just couldn't make much progress. This was a little bit more constructive on Friday. We did come down to the buy, which is common. You'll see stocks will come back down and test the buy levels. It came down, tested successfully, and then ended up closing up in the upper part of the range. So, and on higher volume too. So that was actually a good sign. And one thing we did like though is that on the day that it broke out, we did have nice high volume, and this was also the largest volume since the base. So that's a really good sign. Institutions did come in and buy the stock. So it's looking good. It just hasn't done much. So, and then in terms of fundamentals, you can see here just improving earnings. They were negative 4 quarters ago, minus 22, then minus 3, then plus 29, and then plus 98. Big improvement. And then sales have been improving every quarter too. And the margins have been improving too. We almost had everything improving over the last 4 quarters, which is a great sign. The margins came down a slight bit, but it looks really good. We have good ratings on the stock in terms of growth rate. Annual earnings look good. So this could be a nice winner, but that we've got into, but we're early in the game. Let's take a look at British Petroleum, or BP. So this one we bought coming out of this lower area where the trading was getting tight. Even though in MarketSmith, we're showing here the top of the base would be the top of this 3611. So we got in a little earlier with a low risk here. And what you could do though, if it's acting well, when it gets up to this top of this previous thing, maybe we can actually even add to our position and make it a full position, because we bought a half position here. So we'll see, but it's acting pretty good. Low volume though, you can see, but we've had 1, 2, 3, 7 days up in a row. Real nice. Could be time for a little pullback though. Sometimes when you get that many days up in a row, you get some negative days. But this oil sector is actually, and gas is acting pretty well. We're seeing more and more stocks starting to appear though in this sectors too. So it means that the money's flowing there again. Very strong earnings and sales, so it looks really good. So we'll see what we'll see. We just got into this. RS is a little on the weak side. We like to usually buy stocks in the 90s, but this was one that we did get. The one that we didn't get because we didn't want to add exposure, and this is going to now take us to our watch list, is Valaris, which is VAL. Now this one actually looks really strong. Of course, if we had bought it, it would have been pretty good. Again, we're buying it coming out of this little area here where it tightened up. This one's acting pretty well. It's got a better RS. Its volume's stronger, but we didn't want to add exposure at the time. So I'd say this is probably the better of the stocks, just acting a little stronger overall. And it's still in our buy range, 70.50 to 72. We're at the top of our buy range, even though in MarketSmith we have a 5% buy zone here in the blue. So this is our ready list. I'm sorry. So that one's in the ready list. It's looking good. Again, there's a lot of these. Some of them I've already taken off. One that we sort of had on the list, we took it off, is Halliburton. This one's actually gone too far. So same kind of thing. I had a little tight area here. That was the buy over here. And this one's sort of gone. So the next one is TJX, which is TJX Companies. They have home goods stores, TJ Maxx, and I think Marshalls. So this one, again, had a little big cup with handle, even though this is saying it's a flat base. Pretty nice. In the handle here, the volume dropped down, which we like to see. And of course, this was a buy zone. It's right over here where it got tight on low volume. It broke out, but now it's kind of pulling back to the, not quite to the top of the buy range, of the buy point, but we're getting pretty close. But you can see this is kind of common. We have the breakout and it just hasn't been able to make any headway. But the volume's been low too, so there's really no sell signals going on. It's just not acting all that strong. What we hope will happen is that it's going to just continue to pull back, or maybe that's it, and then you'll get one day that it just takes out all of this little area here on what we'd like to see is like a tennis ball. It bounced. We had a little correction, reaction after the move up, and then it just bounced straight up. That's the kind of action we like to look for. We don't want to see this keep going down or drifting down Eventually, it starts adding up into sell signals, and the breakout just didn't really work. So we're watching that. It's actually looks pretty good, and we're right in the middle of the buy range, which is 79.94 to 83.50. So it could be purchased here. Ideally, we're always trying to buy it as close as possible to the bottom of the buy range. Just that way, your stop can be tighter, and if it doesn't work out, you just lose less. The next one was Toro, which we already looked at. The next one this one's kind of interesting, is McGrath Rent Corp, which was a company I'd not heard of until it sort of popped up on on our charts. Now, they're kind of an interesting B2B rental company. I don't understand their product line: modular buildings, test equipment, and hazardous waste containers. I don't know what the synergy between those is, but they must. So now here's one that actually is we're going to call this a little more constructive. And why I say that: so we had a big jump up here in earnings, a good sign, and then we kind of just were that jump up. Sure, we had a little correction here, but it wasn't. The sellers weren't appearing trying to kick it all the way back down. So that was a good sign. And then we started getting tighter and tighter in the trading. A few times it tried to break out, wasn't able to do it. You can see how these red days, they closed near the lows. Then we had a pop up on nice volume where it tried to break out of this whole range. Looked good. Then we had this day where it just plunged down and kicked everybody out who had stops and came all the way right back up. Now, this is when sometimes you get the conspiracy theory saying, oh, that's what market makers do, and they just they run the stops and they just kick everyone out. Well, in this case, that could be what happened, though. When I looked at the chart closely, it just looked like there was one trade down there. It wasn't a lot of trades, or it could have just been a mistake, just a bad print. Anyways, but looking at this chart, if it kicked you out, it's actually more constructive now, because all the weak hands, people that had their stops here, they're all gone. They got kicked out and it just came right back. So we actually have a little bit of an improvement in the situation. So we'd like to see this maybe tighten up here. And then now we're breaking out basically around the same price, maybe a little higher. But now we don't have the sellers that could be lurking there. So we'll see. But that's interesting. This is what happens, unfortunately. You'll get, and we've seen this more in this market, where sometimes the bids they dry up because hasn't been a lot of trading volume. Institutions they've been more selling into things. And so I've seen a lot of these just out of the blue, stocks just break open and then buyers come back in. So that could be what's going on with this one. But it does look good. Industry group is 6 out of 197. So, and it's a stock that probably nobody knows of, but here's one that's just been slowly but surely growing the business. Composite rating of 99. It's great numbers. And if you look at a weekly chart, I don't think the numbers are good now, but it looks like in the past, we had negative earnings here for a bunch of quarters. We've turned positive, but it looks like in the past it has. See if I can just move this out of the way. Yeah, it's capable of making a move. This was 50 up to 90. Yeah, it's not. This doesn't look like one that's ever going to be a screamer, but it could be a nice tradable stock. This is kind of a stock that if you got a 20, 25, 30% move in it, you'd probably just say goodbye. Okay, the next one on the watch list is BP, which we already covered, and then we have the last one, which is Dorchester Minerals. Now, this is a master limited partnership, which can be a little problematic in that they issue K1s and you have a little more things to deal with in terms of your taxes if you're investing in these. That's the downside. The upside, though, is they tend to have a very high yield. So in this case, it's 11.5%. Now, that can be a little bit of a warning flag sometimes if the yield's too high. It could be that sometimes that the stock has declined so much that's why the yield is rising. In this case, though, the stock has actually been going up. So it could be, you'd have to do a little research if that yield is sustainable. You have to also look at other MLPs. Are they also yielding the same? Let's see if, actually I don't think of any of these are. Let's see a RepX. No, it's not. So let me go back. Sometimes you want to see just other ones. Are they also yielding the same? But this is could be sustainable. So let's go back to the. So, but that's something you have to know about. This one has been kind of, you can see it's been tightening up, and just let's see. Our buy range is 30.20, so we're just in the buy range up to 31, which would take us up. Yeah, kind of clearing out almost all of this. You can see the seller's just been lurking in the upper 30s. So we're hoping to clear all that and take off. But just know that, yeah, you got a nice yield on this, but it may be, may or may not be sustainable. And also you're going to have some tax things. So I generally don't like to put the MLPs on, but there hasn't been a lot of stocks that are really on our lists. They're just, that's one part of the problem. We don't have a lot of merchandise. So that's it for the ready list. We do have one in our long-term outperformer, and that's CBIZ, another stock that most people have never heard of. Let's see, our buy range, we're in the top of the buy range. We're actually trying to buy this. It was coming off of the 20-week moving average, which we have now surpassed. So we're in there. We can see it's actually bounced off of that. It's coming up, and it's actually hit resistance at its 10-week, which is the 50-day. Sorry, the 200-day. So sorry, the 50-day. Sometimes you go back and forth, a little confusing. So you see, yeah, it's actually hit its 50-day, and it's looking pretty strong. But the volume's been low on this. Yeah, we haven't really had a lot of action on the long-term outperformer list just because it's for the last year, most of the names just disappeared. And there's been really not a lot of stocks setting up properly. So we'll just, we'll see. That one, we're not buying it for the portfolio. It's been a little too volatile, but it is set up. It could just take off from here, and now the market's kind of acting better. But the volume's a little concerning. It's just not a lot of oomph behind the move. So we'll see. But it's on the list. Let's move to our watch list. There really isn't much. The first is Cardinal Health. This one, let's see. Our buy range is up here. We're trying to clear this whole area here. We're just not, which would be about 80. We have 81.40 to 83. So yeah, we're clearing all this over here. So we've actually drifted down. It's still acting pretty good. Let's go to the weekly. Yeah, we've kind of broken out of this long range here finally, and we're up. I don't know if this is all-time highs. Actually, I can't reach my monthly. My screen recording thing is blocking it. If I move it, I'll mess the video up. So I can't go to the monthly chart. But it's acting pretty well, and this is definitely it's a medical supply wholesale drug. Not your typical growth name. It's been more of a value name or a defensive stock. For probably value investors, this has really come a long way. Probably some of the value investors might be selling into this up here if they had bought anywhere down, when it was considered more value in the 40s, and now that we're approaching the 80s. So that's on the watch list. It's just kind of drifting. If it drifts much down more, we'll probably take it off. It's also now been staying below, we call it living below the 50-day, which is the red line. If it lives below there much longer, yeah, that won't be taken off the list. And then we have a SciPlay. The last one is SCPL. Now this is they develop, design, and publish digital games. So we have a rare tech stock that's appearing. This one's appeared a few times on our list, but it hasn't been able to really get anywhere. It does have a little bit of overhead resistance to contend with from about a year ago, but not too bad. 16 up to 22 or so. Not like we have. This has dropped from 50 down to 16, and they have tons of trap buyers. But we do have some that may be a little bit of an issue trying to break out here. But you can see I have a nice tight area it's formed. This is the weekly chart. here, and it just needs to clear all this to give us a buy signal. Here on the daily chart, yeah, we have 1616 to 1660. So we're trying to clear, yeah, all of this area here. The buy is right above this area here. In terms of fundamentals, it's been a pretty, it's a little spotty, but it's acting pretty well, and it's made a nice move already from its low. We're up 60% or so. So it's a contender, but it's not fantastic. So, but that's what we're given. And that's it for the stocks on our watch list. Just not a lot. So that's why we're still using, we're not piling in. We're not getting, just to wrap it up, we're not getting a lot of action yet from our positions. They're just not moved up much. You have to remember too that you may see the indexes just go rip roaring while individual stocks or leading stocks just aren't going anywhere. And why is that? Is that the money's flowing right back into the old names, the Apples, the Google, stocks like Team. Let's take just a quick look. This is where the money's going. But look at the downtrend. This is trying to buy these down here. You're just bottom fishing. There's below all the moving averages. We're in a bear market here. Let's look at a weekly. That's just. It's not the time to buy this unless you're Kathy Smith, or not Kathy Smith, Kathy Wood, who loves buying all these stocks, bottom fishing. But she's been bottom fishing them the whole way down, which is why her fund is down, 70%. So this is where the money's going. So we don't look at these stocks. We're looking at the opposite. We're looking at stocks that are not making new lows, but are making new highs and are in uptrends. So that's it. We'll see what happens next week, but we do have a promising start, and hopefully we can get our indicators to move to green, which would give us sort of an easy dollar environment, which we have not seen in a long, long time. It's almost, we're going to be closing on 2 years of a sort of a difficult environment. So at some point we will get it, and the breakouts will work. There'll be tons of stocks coming up. You'll see our watch list and ready list there'll be too many stocks to buy, but we haven't seen that, and we're not quite there yet. And it may not happen yet. It could, but it will at some point. So all we do is we just do things methodically and without emotions. Which is not your friend as an investor. And but we'll see. So we'll be back next week with more of this crazy volatile market. Okay, have a great 3-day weekend, and we'll talk to you next weekend. Okay.